After this, friends, to make a profit from crypto trading, it is very important that when your stop loss is hit, suppose you are only losing 1000 rupees. Yes, but when your target is hit, earn as much profit as you can. That means if you are ready to risk 1000, then if you can get 5000 from here, why not earn 5000? But the problem is, for example, let's say you bought some crypto at 100 rupees and its price has increased to 105. Now, if you are working with leverage, you would be seeing quite a good profit. After this, the price increases to 106. So you would still be seeing a decent profit, but you also note that prices do not always keep increasing. They also dip a bit afterward. Now, if the price goes from 106 to, even if it decreases to 105.5, what will happen here? Here, you will feel that you're currently at, say, a 40% profit. So if I don't exit my trade here, it's possible that the price might drop and I could face a complete loss. Because of this, what people do is, as soon as the price falls a little, right there, then they exit and leave with a little bit of profit. But what can happen after this? After this, it might happen that the price went down slightly, but after going down a little, the price went up to 110. And here you think, if I had waited a little longer, the price would have reached 110 and I would have made a lot of profit. But practically speaking, when you see that the whole price is starting to fall, it's very difficult to stay there. What is the right way to set your stop loss so that you can maximize your profit? And also, your stop loss, that can also become a no loss stop loss, meaning if the price goes down, then there is no loss to you. Will and I won't just tell you this, I'll show you practically. It's already done. I've recorded the screen, so I'm going to show you that practically. If you understand this whole scenario, then the chances of you making a profit here will be maximized, and the main thing is that you can catch a big profit here. So let's now move to the Delta Exchange platform, and how this can happen, I'll show you. So we are on the Delta Exchange platform now. First, I'll show you a demo here. Then I'll show you the trade where we actually made a profit. Let me first show you a trade to explain the process. So I'm showing you an example. That's why I've chosen to buy 10 lots here. The trade has been executed. Now, as soon as it is executed, you can see that the order has been submitted and my trade has been executed. And currently, you don't see any significant profit or loss. Below, I will also show you in PNL that currently we are not seeing any significant profit or loss here because, as you know, I have only bought 10 lots, and on top of that, I have taken only 15 times leverage. So not a large amount is involved or much leverage taken. Therefore, no immediate profit or loss is visible here. Because I wanted to show you an example, that's why I took this trade. Now see, when you take a trade, what happens afterward? The most important thing after that is that you need to set your stop loss, because if you don't set a stop loss, it might happen that once you make a profit, twice you make a profit, 3 times you make a profit, but at some point it will go against what you had thought. And after that, you will face such a big loss that everything you've earned in 3 or 4 times will go away in one instance. That's why it's very important to set your stop loss. So now the biggest problem arises, how do you set a stop loss? What should you look at for your stop loss? Apply. So see, either you should set your stop loss by looking at your strategy, and if you are not deciding your stop loss based on the strategy, then there is an indicator for this. Here is the indicator section where you can go and so now you will see that its ATR is only 27 points. That means in 1 minute, it can only fluctuate 25 to 27 points or 30 points up or down currently. But since we are trading in a 1 hour time frame, if we look at the 1 hour time frame, we realize that, well, it can fluctuate 457 points, which roughly means 500 points up or down. So this means that if I took a trade here, I would have to place a stop loss at least 500 points down. So you have understood here how to decide the stop loss. If you are not understanding from your strategy, then we have bought around 94,900. And if it comes down by 500 points from this, then my stop loss should be around 94,400. To play it a bit safer, you can set it around 94,390 or so. You can place your stop loss here. I'm just drawing a line indicating that our stop loss should be here. So in this way, we have decided on our stop loss. Now the biggest thing is how I can take the maximum profit, which is the most important for me because right now I have taken a trade here without looking at anything. But for example, let's assume I had taken a trade here or even here. So after taking the trade here, the price had increased significantly. I would have made a decent profit here. After that, the next candle was also rising. So until this point, I would be tension free because my profit was going well up to here. But as soon as this red candle formed in the next hour, you can see here that when this red candle was formed, the price had come down to this level.
So let's assume at one point you were seeing a profit of $500, but when the price came down to this level, your profit was only $300, and at that time,
the candle you see here is completely red. So what would be going on in your psychology at that time? You would be thinking that at one point I had a profit of around $500. Now my profit has reduced to only $300. And if the price goes down, then I realize that a substantial profit was visible. In that situation, I end up in a loss. So here, you will sell out of emotions. Whereas if you had waited in just a few hours, your profit, which was earlier 500, could have reached up to $1,000. Moreover, see after that, the price increased from there. So now for us, saying anything or making any decision is quite an easy thing. And in such a case, daydreaming costs nothing. But practically, you won't have anything ahead. You would be sitting there only, and after that when the price is here, it's not necessary that the price will go up. It could be that the price comes down after this and your stop loss was here, and what would happen to you? You suffer the entire loss. At one time, you saw a profit of $500 and in the end, you leave giving away $100, $200, $300 and then you regret that there was a profit at one time. If only I had sold at that time, it would have been such a good profit. I've incurred a loss. So there is a tool you can use to avoid this thing. First, this decision. This Thursday, we have seen how to decide the stop loss, whether to decide based on ATR or your own strategy. So based on ATR, we found out that we need to keep at least a 500-point stop loss for Bitcoin. If you don't set it that way, there will be so much fluctuation in the price that our stop loss will easily be hit. So what do you have to do now? Now you need to go to your trade, and here you can see that you have the option to set both the target and the stop loss. So it's up to you if you want to set a target, or there is a better option in place of the stop loss. You have the option to trail here. You decide the trail. So here, I know that I need to keep a stop loss around 500 points. So I've decided on 500. Now, as soon as I've decided on 500 points here, and then I click on confirm. So now I have set a trailing stop loss. Now let's understand what this trailing stop loss is. Look, first I removed that line of mine.
I have removed this line from here. Now watch carefully.
I am showing you a demo right now. I will also show you what I have done practically. You will enjoy that more because things will be clearer there. Here we have taken a small trade for the demo, so nothing particularly significant will be understood. So now see, my stop loss is, it's at 94,380 and the current price is at 94,335. So right now, the price is almost where I bought it. But after this, it might be that the price increases to its 94,100. But now you can see that my profit is running around $305. That means my risk here was $75 and it's almost 4 times that, meaning our risk to reward ratio here is 1 to 4. Now you can see that the price has reached 149.47 and our stop loss is set just behind it, 148.47. Now see, if I want, I can exit my trade here as well. But look, I don't know how much the price will go up from here. No, a day appears starting by 10 it will go up by 5 points, 10 points, and a few days ago you saw that there was a very big movement in Bitcoin. If we had taken a trade in Ethereum at that time, how big a movement could we have captured? So to not miss those big movements, we are using a trailing stop loss here. Now see, you have understood the benefit of this trailing stop loss, but it can also have a downside. It is important for you to know that as well. So let's understand that too. But before starting with that, check here that our trailing stop loss in this trade is 94,505. Now I will explain the concept, and after that, if the price goes up from here, then this stop loss of ours
it would have automatically gone up. We will then see whether it goes up or not. So for this, we go back to the screen. Now assume that this is a candle, this is a candle, this is a candle, and then I make a red candle because I need to clear up a concept for you. So let's assume this is a price of 100 rupees, and at this price of 100 rupees, I have done buying here.
Yes, and my stop loss is set 10 points behind. I have set a trailing stop loss, which we have to set by looking at the ATR, as I have explained to you. And let's assume that my stop loss is at 90 points.
If the price comes to 90, then my stop loss will be hit. But what happens next is that if the price increases from here and then comes down, see, you had to set a stop loss earlier as well. That same stop loss will be hit here. And the loss that was supposed to happen earlier will occur here. No different loss here. Zor, yas, tep, taati, das.